Hello, my name is Sarah Wheeler, and I'm the head of the Anti-Money Laundering Division at the Cayman Islands Monetary Authority, and today I'm going to give a short presentation about the Securities Investment Business Excluded Persons Risk Assessment that was recently conducted by the authority. So I'm going to cover a number of areas when describing the work we did on this risk assessment. First of all, I'm going to briefly talk about the background and overview of the Securities Investment Business Excluded Person or Cbp Risk Assessment. Then I'm going to talk very briefly about the risk assessment methodology and the principles behind that, and the definition indeed of a SIB excluded person. Then we'll look in a bit more detail at the actual sectoral risk assessment and the timelines around that. Then we'll look at SIB registered persons and look at the inherent risk summary. And finally, we'll end with some key takeaways as to how you can best use the findings of this risk assessment to implement and enhance your risk-based approach to managing and mitigating money laundering risks. So the purpose of the risk assessment for the Cbps and the purpose of this presentation is to identify and assess in more detail the money laundering terrorist financing risks faced by the securities investment business sector in the Cayman Islands. Is to evaluate the risk from a sectoral perspective, so understanding that this might not just cover risks that are specific to the circumstances of individual SIB excluded persons, but indeed the whole sector, the whole spectrum of SIB licensees who are already regulated. And hopefully it will allow those SIB EPs who've now re-registered and come into the regulatory sphere to augment their business-wide risk assessment and develop and apply their risk-based approach to compliance under the anti-money laundering regulations. So what risk assessment methodology was used to conduct this risk assessment? Well, the risk assessment is an analysis of inherent risk factors. So that is the inherent risks that exist prior to systems controls or mitigating measures being applied to manage those risks. So in order to evaluate that, one has to look at the following areas: the nature, size and complexity, the structural risks of the sector, transactions, products and services, delivery and distribution channels, clients and customers, and underpinning all those four, geographical risks. And these factors combined amount to an overall inherent risk, which for this sector was rated medium-high. So who exactly are we talking about when we discuss SIB excluded persons? Well, these SIB excluded persons are not required to be licensed, but are now required to be registered with CIMA, and they were formerly excluded from regulation. However, Schedule 4 of the Securities Investment Business Law 2020 revision captures these persons within one or more of the following categories: a company within a group of companies, for a sophisticated or high net worth individual or a company, partnership or trust owned by high net worth individuals, or an entity that's regulated by a recognised overseas regulated authorities. So the Cbp risk assessment was one of a number of risk assessments that were conducted by the authority and published as part of our combined sectoral risk assessments on our website on the 13th of March. And that assessment doesn't just cover SIB EPs, it covers SIB licensees, it covers mutual funds administrators, it covers the banking, money services, businesses, industries, TCSPs, insurance, and is a very comprehensive look across all the sectors that the authority supervises. So there's been quite a lot of activity connected to SIB excluded persons in the last few years. In 2015, the National Risk Assessment identified the need for supervision of excluded persons. Then in 2017, the CFATF mutual evaluation really confirmed those findings and suggested that yes, indeed, SIB excluded persons needed to be brought into the fold of regulation. So 2019 saw wide-ranging legislative changes to bring SIB excluded persons under full AML-CFT supervision, and it saw the authority also conduct its comprehensive AML-CFT risk assessment for this sector, and that is what this presentation will now focus on. So the wide-ranging legislative changes that I alluded to mean that effective as of 15th of January 2020, SIB excluded persons regime no longer exists, and they must re-register as registered persons. CIMA will now exercise AML-CFT CPF supervision of registered persons similar to SIB licensees, and that re-registration process which has been concluded, involves fitness and proprietary testing. There's also testing for directors, shareholders and beneficial owners of applicants. And there are ongoing updates to be provided to the authority. So underpinning the CbP Excluded Persons Risk Assessment in 2019 was a great deal of data that was collected over the course of that year, and that was around the following categories: the size, nature and complexity, the structural risks, clients and customers, transactions, products and services, delivery and distribution channels and geography, and I'll come on to describe each of those in detail now. So this is a high-level summary of each of the conclusions for those areas. Structural risks were considered high, client customer risk medium high, transaction product service risk medium high, delivery channel risk medium high, geographic risk medium low, and the overall risk rating medium high. So what factors were considered when we first looked at the structural risks, or the nature, size and complexity of the sector? Well, the key factors were considered: the value of assets under management, the volume of transactions executed, volume of international transactions, the number of clients and customers, physical presence or not of the entity in the jurisdiction, equally location of parent company, affiliates, subsidiaries, were they in high-risk jurisdictions, and where the principal place of business was. So the data gathered for the structural risks was quite conclusive. 93% of those Cbp EPs that were looked at were exposed to a high inherent risk based on the purpose for which they were set up and the purpose for which they were excluded, which was to conduct securities investment business exclusively for either a sophisticated person, a high net worth person, a company, partnership or trust, whether or not regulated as a mutual fund of which the shareholders, unit holders or limited partners are one or more such sophisticated or high net worth persons. So a high inherent structural risk. So now looking at customer risk. So this is really looking at the types of clients and customers and the geographical background of those clients and customers. Are they, for example, from high risk jurisdictions, and what percentage of the total? So the data on customer risk showed that 6% of customers originated from high-risk jurisdictions, and of those, 0.6% were high net worth individuals. 1.5% of customers were PEPs from higher risk jurisdictions, and in total 12% of the clients and customers of CbP excluded persons were in categories of higher risk. By contrast, 58% of clients and customers of CbP excluded persons were medium high risk, and approximately 6% of those customers may have had medium high risk types but did originate from a higher risk jurisdiction. So the overall risk rating was deemed medium high. So the next element of the inherent risk analysis was looking at transaction, product and service risks. These were deemed medium high. So the factors to consider here were the complexity, liquidity and volatility of products offered, the type of services offered, the forms of payment accepted, and the client-customer onboarding and interaction. So the data around CbP EP showed that there were certainly certain products which were higher risk than others. For example, options and futures and contracts for differences. 55% of CbP EPs offered at least one of these products that are high risk. Medium high risk products included instruments creating or acknowledging indebtedness or entitlements to securities and certificates, and again 25% of CbP EPs did offer these products. CbP EPs engaged in higher risk services such as broker dealing, market dealing or securities managing, and a lower proportion engaged in lower risk services such as securities advising and securities arranging. So the overall risk assessment here was medium high. The next area of consideration for inherent risk were the delivery and distribution channel risks, which were rated medium high. So the factors considered here were the extent that client or customer onboarding and interaction is done face-to-face versus non-face-to-face, and the use of intermediaries, eligible introducers and/or reliance on third parties when conducting business. So the data around delivery and distribution risk showed that 50% of customers were actually onboarded directly by the CbP EPs, and 90% of these were done by face-to-face interaction. Approximately 5% of customers were onboarded directly through a medium risk, direct, non-face-to-face contact method. and an additional 5% were onboarded using an eligible introducer. So of all the customers onboarded through an eligible introducer, 2% did originate from high-risk jurisdictions, and there were 1% of customers onboarded by way of a non-eligible introducer. Only 1% of Cbp EPs indicated that they would utilise high-risk online platforms, so the overall delivery distribution risk was considered to be medium-high. And finally, underpinning many of the inherent risks we've just discussed are the geographic risks connected to clients or customers based in, controlled or owned by persons from high-risk jurisdictions, or transactions coming from or going to high-risk jurisdictions, or a large international client or customer base. So the data around geographic risk suggest a medium-low risk. So although Cbp excluded persons were used by persons and entities all around the world, the evidence suggested that the biggest ties were by far with China, Hong Kong and the Far East, the USA, the UK and the Cayman Islands. Only around 1.6 or 1.7% respectively of connections with beneficial ownership, shareholders or customers and clients were with what were deemed to be high-risk money laundering countries. And although there were these links, the vast majority were not with countries that were traditionally thought of as high-risk jurisdictions. So on that basis, the overall risk rating for geographic risk was deemed medium-low. So what are the key takeaways for financial service providers when considering this risk assessment into Cbp EPs? Well, entities should consider, when conducting their institutional money laundering terrorist finance risk assessments, the following aspects. They should consider their exposure to highly complex or volatile products. They should consider how they deal with international transactions. They should consider politically exposed persons. And then they should take into account the findings on non-face-to-face and use of intermediaries in this business. And of course, underpinning all of the above, they should always have systems and controls in place to manage and mitigate the risk connected with conducting business with persons in high-risk jurisdictions. This should enable any financial service provider to apply a robust and effective risk-based approach to managing and mitigating AML and terrorist financing risk. And that has four main elements to it: the identification and assessment of risk, which hopefully this risk assessment will be very useful for, the management and mitigation of those risks by identifying and applying the appropriate measures, whether it's introducing transaction limits or using senior management sign-off for certain measures, or whether it's enhanced due diligence, and then your ongoing monitoring obligations, which enable you to implement the right policies, procedures, and importantly systems to be able to keep a constant eye on changes in behaviours and transactions and activity. And then finally, your documentation, which should really demonstrate to any third party that you have the right strategies, policies and procedures in place. And for those of you who may be interested in a bit more in the data that's underpinned these risk assessments, these resources and reference point you in the direction of some useful source materials, including the Basel AML Index, the FATF recommendations, the FATF Money Laundering Terrorist Financing Risk Assessments, UN Sanctions List, our guidance notes including our ongoing monitoring and risk-based approach that were published in February 2020, and of course the combined sectoral risk ratings that we published in March, which I referred to earlier. We also have published a number of AML CFT newsletters and advisories. Thank you for your time and attention in listening to this presentation on the risk assessment for Cbp EPs. If you have any further questions about some of the findings here, please do not hesitate to get in contact with us on contact@amlcft@cema.ky.